Hello, we are Group 6 and we consist of 3 members. Myself, Thamo, and other member are Sathira and Lekijema. Next, please. Today, we'll be presenting on the surveillance report conducted by the ASIC on the financial reporting and the audit quality. Before presenting the findings of report, we would like to highlight on the what is audit, significance of audit quality, and the why there is a audit expectation gap. First one is audit. Audit is an systematic examination and evaluation of financial statement, records, and the operations to enhance the accuracy, compliance with regulation, and adherence to the accounting standard. And audit is important in maintaining the investors' confidence and the market integrity because it helps in to detect the material misstatement and also prevent the errors and the fraud, thereby enhancing the credibility of financial information. Audit quality is to provide the assurance that the audited financial statement and related disclosure are in accordance to the related accounting standard and the audit standards. And the main reason for the the audit expectation gap is due to the public's exaggerated expectation of the auditor's responsibility and difficulties in evaluating the auditor performance. It also highlights that the deficiency in auditors' performance and their lack of awareness regarding their responsibility. Next, please. And now we would like to present on the overview of the report. The main purpose of report is to enhance the transparency and accountability in accounting in the financial reporting practice. And it also highlights that the auditor are important. The role of auditor is important in maintaining the integrity and reliability of financial reports. And the report also highlights on the importance of financial reporting and audit quality, which explains on that the reliable financial reporting is important for the informed decision making by the investors and stakeholders. It also highlights that the high quality audit ensures the integrity of financial statement and brings the trust in the financial market. And the time period for the surveillance is from 1st of July 2022 to 30th June 2023. Next, please. Now the Sathira will present on the audit evidence.
Thank you, Pelden. So I'm continuing this presentation with the question number 1. So what is audit evidence and why is it important? Audit evidence refers to the information auditors collect to support their conclusions regarding an entity financial statements. This evidence is critical in informing auditors' opinion on whether the financial statements are free of material misstatement, either due to fraud or error. Audit evidence can take many forms, including physical evidence, documentary evidence, analytical procedures, testimonial evidence, or computational evidence. So let's look at the importance of the audit evidence. So actually, there are a few audit importances of audit evidence. First one, we can see the primary purpose of audit evidence is to enable auditors to form a basis for their audit opinion. Without sufficient and appropriate evidence, an auditor cannot express a reliable opinion on the financial statements. And the next importance is the risk mitigation. Collecting robust audit evidence helps auditors identify and mitigate risk of material misstatements. It supports the detection of errors or fraud that could significantly affect the financial statements. And the next importance is compliance with these standards. Auditors are required by professional standards such as International Auditing and Assurance Standards Board or the other general accepted auditing standards to gather sufficient and appropriate audit evidence. This ensures the audit is conducted systematically and that conclusions are well founded. And the fourth importance is to make proper decision making. Quality audit evidence aids in making informed decisions, both for the auditor informing an opinion for stakeholders relying on the financial statements. Investors, creditors, and regulators depend on audited financial statements to make decisions. And the other importance is legal protection. In case of disputes or litigation, well-documented audit evidence can protect auditors by demonstrating that they perform their duties diligently and in compliance with professional standards. And in the next slide, let's look at the answers for the second question. What does the case study material tell us about the audit evidence? So, as per the finding of this case study from audits, do not necessarily mean that the financial reports audited were, in fact, materially misstated. But we can identify that the auditor did not comply with the requirements of some of the auditing standards and therefore did not have sufficient basis to support their opinion on the financial report. So, I'm going to present the deficiencies identified in the audit evidences collected on this report of in certain key audit areas. Most of the evidence in each of these key areas are not sufficient and appropriate, and therefore these evidence are not reliable. Uh, let's look at the first key area, which is impairment of non-financial assets and assets value. In this area, the auditor didn't obtain sufficient evidence over goodwill impairment testing. Also, didn't adequately evaluate the comparability of relevant entities used in fair value less cost uh, disposal approach, where the auditor relied on revenue multiple of these entities. The auditor also didn't identify that the entity had used inappropriate valuation techniques to estimate the fair value of combined cash generating unit and accordingly failed to identify that the goodwill was materially misstated at year end. The auditor did not adequately challenge the entity's conclusion that there were no impairment indicators. And the next key auditing area is revenue and receivables. The auditor didn't obtain sufficient evidence over the occurrence of revenue and the accuracy of inputs used to drive the revenue. And also, auditor didn't obtain sufficient evidence over the occurrence and accuracy of management fees, lending fees, and interest revenue. And also, auditor didn't adequately assess the test, the fees, and interest calculation in accordance with the contract terms and relevant accounting standards. And let's look at the next key area in this report, which is inventory and cost of goods sold. The auditor did not perform sufficient audit procedures to review and understand the company's costing approach and consequently did not obtain sufficient evidence to support that the valuation of inventory offshore was measured at weighted average cost in accordance with the company's accounting policy. And also, auditor didn't sufficiently evaluate the work performed by the component auditor to enable an experienced auditor with no previous connection to the audit to understand the nature and timing and extent of the audit procedure performed. Let's look at the other key area, which is provisions. In this area, auditor didn't adequately challenge the decision by the entity not to record provisions for fines and litigation and instead disclose contingent liabilities, and also didn't obtain sufficient evidence about penalties or for possible breaches for legislation and adequately assess the need for a provision. And let's look at the last key area, which is investment and financial instruments. In this area, auditor didn't obtain sufficient evidence over the adequacy of expected credit losses. The auditor didn't evaluate and independently test the reasonableness of the methods, assumptions, and data used in the collateral valuation reports and had not adequately tested the ECL policies in accordance with the ASB 9 financial instruments. So this is the answers for the first and second questions, and from the third question onwards, Lekhi will continue. Thank you.
Thank you, Chris. Now we will proceed with question number 3. Question number 3 is with regard to the impact of case study relating to the veracity of audit practices. Firstly, we have to know what veracity of audit practice is. It basically is the accuracy, truthfulness, and reliability of the audit process and its outcomes. And there are a list of key aspects such as compliance with audits, where the auditors must comply with the auditing standards and the regulations. The quality of the evidence should be sufficient and appropriate to support the opinions. The auditors must be independent of mind, and then auditors must exercise the professional skepticism by questioning the validity of the evidence. And we have where the auditors have to be there should be a clear communication of audit findings so that the stakeholders will be able to comprehend the auditor's conclusion. And the last one is the continuous improvement. It states that the audit profession is subject to ongoing scrutiny and improvement. For that one, there should be regular reviews, feedbacks, and updates to practice help enhance the reliability and effectiveness of the audit process. Now, the following aspects are with regard to the case study. We have inadequate audit evidence, where we have already presented in question number 1 and 2 that in this case study, there are lots of instances where the evidence were not sufficient and appropriate to support the audit opinions, such as like revenue recognition and impairment of assets, we have failure to address the key risks. It was also found that the auditors did not sufficiently assess the audit risks, which was basically associated with the material misstatement, that is inherent risks and control risks. And third one, we have insufficient review of component auditors. The report also pointed out that the group auditors did not adequately review the work performed by the component auditors, which are crucial for ensuring that all aspects of the audit are thoroughly examined. We have another point, that is modification of audit working papers. It was also revealed that auditors modified their working papers after being notified of an impending review by the regulatory body. And last one is impact on the stakeholder confidence. After reviewing the findings shown in the case study, there were lots of deficiencies which can significantly undermine the stakeholders' confidence in the audit profession. So now we have reviewed the findings of the case study, and then we have found lots of deficiencies. Now we will define the audit gap. Audit gap refers to the deficiencies in the audit process that can result in inadequate assessment of financial statements and internal control. Basically, it arises from the insufficient evidence gathering, lack of compliance with the auditing standards, and like inadequate understanding of the entity being audited. So like after reviewing, we found that the case study showed negative impact on the veracity of audit process. And now to minimize the audit gap, we are going to advise audit information users and the audit practitioners. First, we will start with the audit information users. Firstly, they have to understand the limitations of the audit findings, where the audit finding does not necessarily indicate that the financial reports are materially misstated, but it can also reflect that due to non-compliance of the auditing standards, the audit opinion can be non-reliable. Another one is we are advising that audit information users must be actively engaged with the auditors and management, so that they will be able to comprehend the financial reporting and internal controls of the management. And then through that, they can heighten the scrutiny by critically analyzing the financial reports and audit reports. Lastly, we are also advising them to stay up to date and informed about the audit quality, so that they will be able to make informed decisions. Now, Belden will continue with question number 5.
Thank you, Lekki. Along with the advice to the audit information users, now we would like to advise on the following points to the practicing auditors. First one is prioritize the audit evidence. Auditors should focus on the collecting the sufficient and appropriate evidence, especially on the high risk area like revenue recognition and assets impairment. The second one is enhance the compliance with auditing standard. Auditor need to ensure that all the audit procedure are compiled with the relevant auditing standards, which includes like obtaining sufficient and appropriate audit evidence. The third one is to foster a culture of quality. Here, the auditor needs to engage in a continuous professional development to stay up to date with the best practice and maintain the open communication with the client to address their deficiency. And the other one is to implement the robust quality control process. Auditor are advised to establish the strong internal quality process within their audit firm, which includes like conducting the regular audit review on the audit files and ensuring that the audits are adequately resourced with their skilled personnel. Next, please. And the auditor also needs to engage in the continuous professional development. That is, they need to stay up to date on the industry trend, regularity change, and best practice in auditing. And they also have to address on the root cause of the audit findings, like they have to focus on the identifying and addressing the root cause of any audit findings, and thereby developing and implementing the action plans to rectify the such issues or the findings, audit findings, and also monitor their effectiveness over time. And the last one is to promote the culture of audit quality. That is, the auditor needs to cultivate a strong culture of audit quality within their firm, so that it will encourage the accountability at all level and emphasize on the importance of highlight on the high quality audits in maintaining the integrity of financial reporting. Next, please. Now, we would like to conclude that the audit surveillance report emphasized that the role of audit evidence is in ensuring the reliability of audit reporting. The report highlights that the deficiency in the collection and documentation of audit evidence, particularly in the asset impairment and the revenue recognitions, are raising concern about the audit practices. With these findings, the users of the financial reports are advises to critically evaluate the findings and engage with the auditors. Along with the users, auditors are also advised to improve their compliance with the standards, focused on the high-risk areas, and strengthen the communication and quality control. By this addressing such issues, it is essential in restoring the confidence in the audit profession and the ensuring the financial reporting remains a reliable source of information for all the stakeholders. Next, please. Thank you. This is all about our presentation, and these are the references we have referred. Thank you.